Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So it is Thursday and the ECB's out of the way. So it seems like they delivered on most things that they were expected to do, and there was a little bit of volatility in the first 30 minutes as every bear in the world said, sell the news, sell the ECB, sell the low volume rally, sell this, sell that. And what happened? After about 15 to 30 minutes of selling, lots of stocks held in there, and then you had some decent action for the rest of the day. Every day we come in and we try and put together a constructive plan on how to approach the market. What if this happens? Do that. What if that happens? Do this. And over the course of the past 2 months, there were a lot of things that were debatable. Okay, today the big news was that Tepper became bullish again. Okay, but to be honest, when he first came out at the SOLT conference, he wasn't really that bearish. Okay, it was just the media took some of his excerpts and created all this nervous hysteria because that's what the media likes to do. All he said it was, I wouldn't be too friggin' long, which at that point, none of us were too friggin' long because we weren't sure whether or not the 50-day would hold or whether we would get some corrective activity. He said, market's kind of fine, which it was. It was fine not to be too friggin' long. And then in some context, I think someone asked him if he was short. He's like, I don't know if I'd be shorting here, but I wouldn't be too friggin' long. So the context of this new social world of ours made it out as if he was bearish, he was nervous, he was negative, get the hell out of Dodge, blah, 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 blah. Okay? And that was, to be honest, I think right here. So you go to the chart. Right in here was the SALT conference. Right in here, looked as if perhaps we would break to the downside. That, it could have been actually this day, I'm not sure whether it was this day or whether it was here. You had a small breakout failure, okay, so right there that could have been a little negative, which usually breakout failures are. And then you had this rising channel, so to speak, or just a rising trend line that could have been broken to the downside. So right there on those comments, it was worth being cautious. It was worth saying, at that point too, you had the potential of a head shoulders in the NASDAQ, you had the Russell not really participating, you had the banks lagging. So it was one of those spots where you weren't sure. And then from there, lots of things started to change. And as traders and chart watchers, we tried to jump on them, and some people did and made some good money, and some would have liked to and didn't do as well as they thought. And then you had everyone out there in the Twitter sphere that don't trade, that have blaring friggin' thesis that all they want to do is, point out all the negatives or point out all the cautionary status, whether it's lack of volume or lack of this or the sugar high, all the things that get in the trader's head to create the noise. It's just a little unfortunate because if you go back to the chart of the S&P, you will see, boom. So right here is when the inflection point came into fruition. And then on this day, this could have got you at least from, just shorts on the brain to maybe neutral. Then from there, you had a nice move. So closing above this probably hopefully got you long some stuff. And then what happened? Remember that gap up on the Tuesday right there? Okay, was it going to just get filled or was it going to show commitment? Boom, boom, boom. Showed commitment, and then PS, look where we are. Very technically sound move that you had a lot of chances to switch gears. So right around here, whatever date that was what, May 20th? You look at the Qs. The Qs were probably, look, where were we on May 20th? Was this May 20th? What is this date? This is May 15th. So on May 20th actually was right here. Okay, that was the day that it changed. Okay, and we traded above this prior resistance, and that's even after breaking the descending channel, because right here is when it looked a little bit like a head and shoulders top, which everyone pointed out, but there was a chance of this right shoulder being negated if this trend changed. Boom, 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 it changed, and now look where we are. Same thing goes with this gap. This gap was the same gap that you had on that Tuesday, and did it get filled? No. So if you've been rolling up shorts, it's unfortunate, but you're not watching the market. You're watching the doomsday guys on Twitter who are getting very noisy, and I'm actually going to probably take about 100 people off that I follow. I follow like 300 people. I don't even know how I got so many, and starting to create echoes, and these echoes are getting a little loud. So anyway, here's your tech through the highs. Then you can even go to the Russell. Okay, the Russell definitely looked a little noisy. Okay, it looked as if you had this head and shoulders top pattern. What happened here? The neckline held. What happened here? The 200-day got reclaimed. What happened here? You broke the descending channel, pulled in, held, and now look. I don't care if it's down year to date. Entries and exits matter. If you got rid of the Russell or you reduced some risk when the 21-day got broken here with some kind of velocity, Then you had the luxury of trying some back in here. I know Sperling, his play of the week, a week or two ago, was right here. And then today on the VTF, he was buying the Russell. And if you wanted extra juice, you could have been buying the TNA. Okay? And I know it's not out of performing and it might be just close to even on the year, but if you bought it here or you bought it here, who cares? Okay? Entries and exits are what traders live by. And then if you go to the financials, financials have been a laggard. They haven't been great whatsoever. You know, started to break above this wedge for the first time, had some follow through today. And, you know, in the last 3 days or the last 2 days, I know for my morning note, I isolated all the price points on Bank of America, Morgan Stanley, Goldman, JP Morgan. I haven't done that in a while because they were set up. And if they're set up, we look at them. We look for setups. Now, if you go through some of these banks, Bank of America, you know, not a blockbuster move, but there you go. Okay, if you sold it here or you sold it there, you know, and even if you didn't get along in here like I did, anticipating, you had some time in here, and now it closed pretty well, and you probably have some more room. Morgan Stanley also, okay, you know, nice little flag type pattern, red dog reversal. There you go. Whether you we're looking for a huge swing trade or you're holding it for a few days, these are your pockets that can make you a living. 1 to 3 days, that could add up to 2 to 5%. JP Morgan, first time I think I wrote a price point on my Redler Note All Access in a while there, and look what it did. Boom, closed real strong. Maybe tomorrow with the jobs number you get a little follow through, but these are nice price points. If you got rid of it when it broke the 21-day here and you didn't hold into whatever those earnings were, you know, there was an opportunity there. And Goldman, you know, little, weaker today, but it's, and not much to say there. So, it's just, these are things you have to do to make a living. And then you had a different type of trade. Yesterday on Redler All Access, I put a chart in of Google. I said, okay, Google's pulled in, it broke that high level flag at 565. Maybe we could anticipate buying a dip between 546 to 548. Okay, it went to 548.5. So if you were waiting for that zone, maybe you didn't buy it, but then when it did that red dog reversal, crossed 552, maybe you bought it then. So, setups 1, 2, 3. Okay, so here is when you had, the descending channel break, little retest, there you go, small RDR right there. And then yesterday we circled this little spot. You could still look at the chart on Twitter, and here was your reversal. If you didn't buy it in the hole, okay, you could have bought it when it crossed above 552. And then today in Redler All Access, I wrote 559 as your another technical buy point, and you had a nice close today. So either in the hole, red dog reversal, or with some follow through. 3 different ways to skin a cat here on Google. You could have picked whichever one works for you. And some made money with it, some didn't. But either way, it was all spelled out in black and white in the note on the morning call. So that's when you need to use your resources. Those resources are there for you to put it in line with your game plan. So this way you say, okay, Scott says, let me try and buy in the hole. You know what, I don't like buying, a dip because it can create another dip. Oh, maybe the RDR when it crosses back above the prior low, and then I could buy with the stop versus the low, which never happened. Oh, you know what, I like to see it working. Okay, see the pivot there, I want to buy some strength, I want to buy 559 today. Boom. All 3, it doesn't always happen that way. All 3 worked. If you did all 3, congratulations, you're a rock star. You made a heck of a lot of money. But at least choose one, and do something there, and not just think of the naysayers who were yelling and ranting yesterday that, oh, but China wants the U.S. to sanction them because of spying. Shouldn't we stay away? That's what the media headlines were about Google yesterday. It wasn't about, okay, you just pulled in into support. Maybe there's an opportunity, but whatever. As you can see, I'm a little pissed off. Oh, sorry. Amazon. Look at this stock today. Got to give RD some credit, on the site, and that's why we have a site, so everyone could talk and everyone could give ideas across the board. This one has been a laggard, which it has been. Remember back here we had one nice trade, $2.99. I didn't even list Amazon today because I'm like, you know what? It's not worth the time, and then all of a sudden the 3D device came out or some kind of news on that, and it was strong. And then the most important part of it was during that 9:30 to 10 o'clock pullback, it actually went up. And that's when I think Mark bought it to combine where you saw it on the VTF. Some other guys were talking about it. Then we talked about 315 as this pivot if you go back to the chart. So this was pivot right here. Once you got over 315, you figured some shorts would get squeezed, and then you had this little spot right here, 316.49, which would fill the gap, and it actually went all the way up and tested the 200-day. So if you weren't in Amazon, it's been a broken stock and it's been trending down, which it has been. Today was a nice setup, and that wound up, giving opportunities. You go to your 5-minute chart, and you will see in Amazon, okay, this was. Look at this, okay, quick move, sideways from 9:15 to 10 o'clock. So just take a look here for a second, okay? So this is still up 4 or 5 right here between 9:30 and 10 o'clock. Then you go to the spiders. Let's look at the spiders. What do the spiders do between 9:30 and 10 o'clock? Look at that. So the spiders that opened up, okay, just so you see, and then between 9:30 and 10 o'clock went lower. And that's what they did. They went lower. So 9:30 to 10, spiders went lower. What did Amazon do between 9:30 and 10? Ooh, look at that. It went higher. So right there, you could have said, I'm going to take a look at Amazon. I'm going to look at some price points and perhaps, look for an opportunity, because once again, went higher, okay, and then took off. At the same point, the spiders went lower. So at that same point, you had people saying, oh, but what's their device going to do? What's that smartphone? Oh, it's just going to get crushed like everything else. Then you have, oh, but their valuation. Oh, but this, or but that. You drown out all the noise of the internet and of the Twitter sphere and say, you know what? Amazon is pretty heavily shorted. It's been depressed. Futures just got, pretty beat up. Not the futures, the spiders. The market just went negative, and Amazon went up. That's what you need to know. And if you executed, I did not buy Amazon, but Sperling jumped on. RD was all over it. He actually even made fun of me. He's like, you're going to wait till 320 to buy this? And I'm just like, you know what? I'm wrapped up in other things. I don't even want to take a look at it. And lo and behold, the site did pretty well with it, and congratulations if that's you. But just a way to be flexible and take advantage of ideas. One of my ideas was that Facebook could finally get going, and it didn't. So with that said, look what happened here. This was your first move that I think a lot of us went after, including me, in the beginning of the day. Bought it here, and then boom. So with that being said, had to go from whatever size I bought here, reduce a little bit, stay with it, and then it gave us another trade a little bit later in the day. And then, this is just unfortunate. This time, at least, I didn't add. And then right here, when it broke back below 64, got stopped out of some. And then when it broke here, when I was at the gym, I got stopped out of some more, and I'm not in any Facebook overnight. But just so this was the focus, and the focus happened to take me away from other things that worked out well. And if you look at the daily chart, you know what? It was worth being a focus, because what did you have here? You had a nice move here that broke to the upside, resistance, all of a sudden holding higher, and it just wasn't ready. Doesn't mean, unfortunately, it's going to be interesting over the next few sessions. At this point, I hate the stock. So what if it hangs out here another day or two? Next time this tries to go, am I going to be in it and say, you know what, it wasn't ready here, or am I going to avoid it? We'll see what happens. Hopefully we stay with it. It's still above the 8th day, just wasn't ready today. It wasn't Facebook day. Maybe it comes soon. But all I know is this threw off a lot of us if you just focus there. I think I had 6 longs at the time, including Twitter, including Morgan, including all these, and missed out on some other things because this one just was not fun. Twitter, decent move early on, little follow through off the highs. Now we'll just see, what happens next here. Maybe it builds a little bit of a sideways channel, above this recent pivot, goes sideways, and then we get another viable move here. But did act better, just didn't close on the highs. It would have been nice, but all the internet stocks just weren't really in play. I mean, the social media ones. This Yelp also wasn't Yelp day, but at some point maybe it gets above here and gives us a trade. And then in the morning note, if you read Redler All Access, okay, if you come back to me, which goes to anyone who's a member of the VTF, or you could buy it a la carte, I talked about the Chinese internet stocks. I said, oh, these look pretty good. Maybe there's a setup there. Off the top of my head, I think I put VIPS, YY, and I might have mentioned Baidu. I'm not sure. You look at what VIP did today, VIPS. POW, really nice move. Okay, it said leadership abilities, holding above prior resistance, getting in there above the 8 and 21 day, that this would be a spot above what, 166, 167. Boom. Had no idea it would be up 12 to 15 points, but you don't have to know what it's going to do. You just have to know the price point. And there it is back at highs and probably continues higher. YY, which is a laggard, gave you a trade. Wasn't a blockbuster, but look where this is down here in the spectrum versus up here. This one, much better, more relative strength, and that's why you want to stick with the ones with the relative strength. This one's at highs and looking much better and still trending, and a lot of happy people involved in this stock, unless you're short. Baidu did okay today. Baidu, 1 day up after a pullback that you've seen here, right? This is a, decent pullback, decent up day, not quite with momentum yet, but see if that continues. And you just take a look across the landscape, and there's still a lot of things to do. And I understand it's been on low volume, and I understand that you're talking negative GDP when you see the news, or you're talking about negative interest rates in the ECB, and it makes it hard to mentally dislocate from what you read about, which always focuses on all the things that are wrong and that all the potential opinions on why the market shouldn't go up, and then all of a sudden the market goes up. And it could be negative and cloud you from taking advantage of opportunities that are showing themselves technically, and then also go blow up your account. A lot of these guys who have been saying we're going to get some kind of Minsky moment, or I don't even know what the hell that is, but I think that, some kind of black swan. You can't trade based on some day there's going to be a black swan that all of a sudden causes a big gap down, and then it blows you up and this and that. It could happen in a year from now. Who knows when it could happen? And all those guys who are calling for the crash or whatever they're calling for, our thesis is we try and be long when we're above the 8 and the 21 day, whether it's the S&P, whether it's the Russell, whether it's the stocks you're trading. And I think we're fast enough to know that once we break and close below the 8 and 21 day, you no longer have it as a swing trade. You might get neutral it and then figure out what's next. And if the market's going to actually have a big correction, and that's the only reason why I get upset about these guys, is when they make these outlandish statements and they're influencers. Don't call for a crash. Don't call for a 25% move down, because then the average person gets out and they never get back in. If something's going to take place like that, we're going to have to break the 8 day, break the 21 day, break the 50 day, break the 100 day, break the 150 day, break the 200 day before you can even go down, and that's probably just 10%, let alone saying 15, 20, 25. So hopefully, you're looking at the market averages, you see them on their highs, you see bonds doing well, you have a long macro plan, whether you're putting money in every month with some kind of 401k, and the market over time is letting you make money. Because if you're 70 years old and you invested $1 in the S&P before the 1987 crash and did it every single month thereafter, you survived 2001, you survived 2007-8, you survived the Europe potential breakup, and now you're sitting pretty, and congratulations. Maybe reduce some if you're 70. If you're, my wife, who's 37, who started working in 2004 and started her whole 401k program before the financial crisis and did it every month thereafter, which she has. She's a great average cost, and every time we get those statements, we're pretty happy. That's besides what we do here, which is intermediate cash flow, alpha, P&L type trading. And then, you have day trading. If you don't want to be in things overnight, you could just look for the setup. So there's 3 or 4 different time frames to choose. But if you're going to be a naysayer and you're going to be a doomsday guy and you're going to read the headlines, you're not going to learn a system, you're not going to have a process, or you're not going to have a formula, you're going to get nowhere. You're going to use an opinion, you're going to blow up your account, and you're going to miss out on a ton of opportunities. Okay? Don't be that guy. Even if we do correct or something comes in, chances are at some point there'll be some type of way to get back in and navigate and do it at your risk tolerance. Someone said to me today, one of my best friends, he's like 38 years old, he's like, you think I should, reduce my 401k down to 40%, and be in 40% cash because I think it's frothy? I said, listen, you're, whatever he is, 40 years old. I go, if we get a 3 to 5% pullback, are you going to be fast enough to reallocate it back to investing to try and be cute and save that 3 to 5%, or are you going to miss out, and then the market goes 10 years from now and you sit in that cash and you never go back in? I'm like, you have to figure it out. If you were my dad and you were 69 years old and you're at your highs and you're like, okay, this is good, I feel comfortable, yeah, go to 50% cash, because who knows what happens, whether it's 6 months or a year from now, maybe something corrects or whatever. It all depends on where you're at, what your risk is, what your age is, what approach, what time frame. And if you're watching this video, especially as long as I've been talking and blabbing for the last 20 minutes, chances are you're taking the accountability, you're trying to learn, you're trying to figure it out. And we all are trying to figure it out. We try and figure it out every day. So I give you credit for watching, being a T3 Live subscriber, or just someone who comes in and watches the Morning Call Express, the recap, or if you're a VTF guy, or if you're a Morning Call, Morning Note All Access, or you do off the charts because you're not in front of the VTF all day, but you want to get some good setups that you might be able to make some money with if you're a doctor, a lawyer, a vet, a policeman, a fireman, a teacher. There's lots of different ways, lots of different resources, and we try and put it out there for all of you. But if you're going to be out there and just be a naysayer and just argue and just try and counteract everything that the market's telling you, you probably shouldn't be in our community because, we're glass half full and we trade what we see, not what we think we see, and not what we think, or something like that. With that said, Thursday night, tomorrow's a jobs report. I'm going tomorrow with a lot less exposure than I had today. If we gap up tomorrow, chances are maybe you get a little cute fade. If we gap down tomorrow based on the jobs number, lots of strong stocks close near their highs. We could probably buy them to go from red to green and then go into the weekend making some cash flow and starting all over again on Monday. But if you're reading the headlines and you're pissed and you're upset and you're frustrated and you actually been blowing up your accounts because you listen to opinions, you got to change your process and drown out the noise and figure out a better way to navigate moving forward. Have a good night, Scott Redler. See you tomorrow. I'll be in Short Hills, so someone else will be doing the morning call, but I will be on the radio and there will be an abbreviated note. Have a good one.